Let's start in East Africa, where the American President Barack Obama departed from Tanzania on Tuesday after an 8-day tour of the African continent. Obama sought to advance a new U.S. economic partnership with Africa, where the United States is facing competition from other economies around the world. Some commentators have described the American leader's three-nation tour of Africa as an attempt to play catch-up on the policy side. President Obama repeated his pledge that the U.S. wanted to help Africa without being simply a provider of aid. While in Tanzania, he launched a new project called Trade Africa, with a focus on the East African trade bloc, which is a combined population of 130 million people. The White House says that project will later be expanded.
Africa needs the United States. The United States needs Africa. And the only way you can build these relations is through exchange of visits.
We are looking at a new model that's based not just on aid and assistance, but on trade and partnership. And increasingly what we want to do is use whatever monies that we're providing to build capacity.
Now, when in South Africa, the American head of state also said his country is not threatened by China, at least not as far as African trade is concerned. Obama admitted that the relationship between African economies and the United States isn't as strong as it really should be. But he added that his visit to the region essentially aims to change that. With the details, here's CCTV's Sumitra Naidu.
About 20 years ago, almost everything that we bought had a label that said made in America. Well, today it's really hard to find everyday goods that are made in the United States. In fact, it's really hard to find a label that doesn't say made in China, especially on truly American goods like the apple. China's investment in Africa is estimated to be around $200 billion. U.S. trade with Africa is said to be half of that. But U.S. President Barack Obama told local media in South Africa that he's not worried about China overtaking the U.S. in terms of trade and investment in Africa.
I actually welcome the attention that Africa is receiving from countries like China and Brazil and India and Turkey, because number one, the more interest they show in Africa, the more tools we have and mechanisms we have to further incorporate Africa into the global economy.
Obama did raise his concerns, though, about the type of trade and investment happening in Africa. He said it was important to ask how Africa was benefiting from this investment.
I think what he tried to say is that if America invests into a continent or into a region, is that it comes with a lot of respect for democracy and moral issues and compliance. They will get involved into skills transfers and those kind of things, because I think it's important. You know, after the event, after they invested, after they've developed a project or built a road or whatever, you know, if they leave, whoever it is, I think it's imperative that they leave behind a legacy. And I think that will stimulate and that will grow Africa going forward.
The African Growth and Opportunity Act that was put in place back in 2000 is extremely beneficial to African trade. African exports to the United States have grown significantly in the past decade. Obama said the act, which expires in 2015, must be extended and strengthened.
It is obviously very clear that everybody wants to grow the market in Africa, and the way to do that is by ensuring that your contribution in the continent grows the market, makes people wealthier, and in turn creates markets for your own products that then you'll be able to sell. So very clearly a policy of benefication about ensuring that new economic investment raises all boats or gets spread in an economy where people become richer is clearly not just a good social policy, but it's the absolute answer for an economic policy.
The U.S. may have dropped its guard in recent years in respect of trade and investment in Africa, but it's not lost to the region. With Europe still struggling to leave behind the recession and strained relations with China, it would make business sense for the U.S. to up its game in Africa, a region that's offering new growth potential. Sumitra Naidu, CCTV, Johannesburg.
Now, CCTV's Jane Keo has been in Tanzania for the last couple of days, keeping tabs on the final leg of President Obama's tour of Africa. She joins us now live from the commercial capital of Dar es Salaam. Jane Keo, thank you very much for your time. How did Tanzania's business community react to President Obama's Trade Africa proposal?
Well, Rama, they've certainly welcomed it, and it's formed much of the conversation in the local dailies, even as President Obama wound up his two-day visit to Tanzania. Now, this is what business leaders are saying. It's a new start. It's a fresh beginning. It's a good beginning that rich countries are actually coming to Africa, not talking about increasing trade, increasing assistance and finance to help Africa, but talking about partnership, trading with Africa for the benefit of both sides. So they're calling this as a fresh beginning, one that they're looking forward to. Of course, the Power Initiative, the Power Africa Initiative that the U.S. president launched today is perhaps the beginning of that new language by the U.S. in terms of doing business by Africa. And most of them are just saying they're watching to see what's going to happen in the future. But majority of them are talking about exciting times ahead in terms of doing business here in Africa. Rama?
Indeed. Also on Monday, the United States said it would support the transition to a single customs territory and a common revenue sharing authority. Do we have any idea what form that support will take?
Well, Rama, the U.S. statement is not clear about that, but perhaps what's certain is that the U.S. is seeking or hoping to cash in on the EAC because of the market it provides. Now, this means that the U.S. is hoping to support the protocols provided by the EAC Protocol Integration Committee that will see the faster integration of integration of this community in terms of doing business here in the region, that will open up cross-border trade within countries here in the region. The U.S. is also talking about supporting a plan that will facilitate faster movement of goods, including to AGOA, the U.S. program that buys goods to Africa without charging any tariffs. So what the U.S. is basically saying, or the U.S. president is basically saying to Africa, that we're not just here to open up trade to Africa, but we are here to trade with Africa and help Africa trade with itself. Remember, China is said to be making inroads with a win-win situation for all, where both parties are said to be winning when doing trade. Brahma?
Indeed. We'll have to leave it there for the time being. Thank you very much for those insights. That's CCTV's Jane Keo in Tanzania's commercial capital of Dar es Salaam. Now, speaking of China, as more Chinese companies seek to increase trade with their counterparts here in Africa, one Chinese firm operating here in Kenya is looking beyond just profits and investing in the next generation of vocational workers. With the details, here's CCTV's Penina Karibe.
The sights and sounds of workers hard at work at Kenya's biggest airport, the Jomo Kenyatta International Airport. Currently, JKIA handles 6.5 million passengers and 300 million kilograms of cargo annually. It is estimated that passenger and cargo traffic will grow at an annual rate of 12% and 10% respectively.
From what we have assessed, the contractor has been awarded an extension of time. And this extension of time has defined the project to be completed on 31st August this year.
Driving this ambitious expansion project is Avic International, a Chinese company that has been doing business in Kenya since 1995, when it started selling aviation products, vehicles and construction machinery to the Kenyan government.
We really try our best to try to make the Kenyans very satisfied.
In another part of Kenya's capital, Nairobi, construction is ongoing for what is touted to be the tallest building in the city. In a city where businesses are competing for space, this new building is expected to host a large number of enterprises. However, it's not all money and profits for Avic International. The company is giving back to the society in a significant way. It is with that in mind that 3 laboratories, mechanical, electrical and rapid prototype, were introduced to 10 training institutions in Kenya, one of them being the Kenya Polytechnic. But the rapid prototype lab is perhaps what has attracted the most attention.
I've been given the basics to work with machines, and especially now that you have the Chinese machines here. So this is just by the beginning. I think if I go out there, it will not be so challenging to me.
A dream that is not out of reach given the number of Chinese companies in Kenya's construction sector that are not just interested in subcontracting parts production to the training centers, but also tapping into the new talent.
We'll be engaged in long-term projects to benefit the society. We'll choose an orphanage in Kenya. We'll keep an eye on it and keep funding it.
Vocational training remains largely unknown in most African countries, impeding their economic development. And as Kenya seeks to become a middle-income country by the year 2030, many here hope that such partnerships between China and Kenya will be one way of helping the East African nation achieve that vision. Penina Karibe, CCTV in Nairobi, Kenya.
Time for a short break. Here's what's coming up next. We'll be in Nigeria when you come back to look at a backlash over plans by the United Kingdom to impose a £3,000 cash bond on first-time visa applicants. We'll have the details when we come back.
BizAsia. Asia means business.
Welcome back. Motorists are facing long queues at petrol stations in Abuja, the federal capital of Nigeria, as a strike by the National Union of Petroleum and Natural Gas Workers enters its second day. The union is demanding better pay and conditions for workers in major oil companies, as well as the repair of dilapidated roads which are used to transport fuel products. Union President Igwe Echese also wants the government to fix Nigeria's refineries, which are largely dysfunctional. At the start of the industrial action on Monday, members of the union shut down oil depots in Lagos, stifling supply to all parts of the country.
Our refineries are moribund. The turnaround maintenance that is supposed to take place in these refineries, as the year comes in and go, we keep hearing, don't worry, next quarter we are doing it. The next quarter will come and go, next quarter we are doing it. We'll leave 2012 again. We were told 2011, turnaround maintenance will be concluded. We moved into 2012, we are still in turnaround maintenance crisis. We are now in 2013, and this is July.
Still in Nigeria, a proposal by the United Kingdom to impose a £3,000 cash bond on first-time visa applicants from Nigeria and other selected Commonwealth countries has been met with stiff resistance, to put it mildly. Nigeria's Foreign Affairs Minister Olugbagba Ashiru has described the proposal as discriminatory and essentially against the spirit of the Commonwealth as a whole. With the details from Nigeria, here's CCTV's Chima Nwanko.
In March 2012, South African authorities deported 125 Nigerians because they did not have valid yellow fever vaccination cards. This time, the stakes are even higher. First-time travelers to the UK will not even get a 6-month visiting visa unless they post a £3,000 sterling bond. The UK government maintains that the money is refundable, but that's only if the traveller does not overstay their welcome.
If the UK government officially communicates to Nigerian government that before you travel to UK, you must deposit £3,000 sterling. It's a very simple thing. First and foremost, we seek explanation, to that. Second, if we are not satisfied with that, which we introduce similar measures, to the intending visitors from Britain that are coming to Nigeria.
Nigeria's Foreign Affairs Minister has issued a strong statement. The proposed policy would definitely negate the joint commitment by Prime Minister David Cameron and Goodluck Jonathan to double the volume of bilateral trade between the two countries by 2014. Presently, UK-Nigeria bilateral trade stands at £7 billion and is expected to grow to £8 billion by 2014. Frequent travellers are totally disappointed by the actions of the UK, which heads the Commonwealth.
If they say Nigeria should pay £3,000, when they are coming into Nigeria, they should pay £6,000. And let's see who will lose. And then that also means, can they do that to Ahmadinejad? When Gaddafi was alive, can they do that to Gaddafi? Can they do that to Mugabe? Let's begin to look at it. So it means that our president, who's been doing well lately, should also wake up and make a statement.
For now, the British High Commissioner in Nigeria, Andrew Pocock, has apologized, saying the visa bond issue was only a proposal. He, however, admits that it is a pilot scheme and will only adversely affect Nigerian first-time applicants. Chima Nwankwo, CCTV, Abuja.
Right, from those pretty livid reactions in Nigeria, let's go live to CCTV's Miriam Bemad right now. She's live in London. Miriam, developing story, quite frankly. Do you have any more details on this with respect to when the pilot program will be rolled out, what countries will be targeted, and what kind of bond sizes we're looking at?
You know, that's right, Rama. We have very little details. What we do know is the UK government officials have been very reluctant to speak on this, obviously, given how much controversy it's creating right now. Now, some media reports are saying the program will focus on visitors from 6 countries: India, Pakistan, Nigeria, Sri Lanka, Bangladesh, and Ghana. The Home Office has made comments that it will have details later this year before the scheme actually rolls out officially in November, and also made it clear the program wouldn't apply to all visitors from the designated countries, but only to individuals regarded as high risk. This in itself, of course, though, may violate EU laws under provisions of the European Convention on Human Rights.
Indeed. Well, this idea at face value really does look a bit like a zombie. It came up under Labour, it died, came up again, still died. So what has prompted its resurrection, if you will, this time round under the Tories?
You know, many are asking this question, especially some Tories themselves. Now, Britain is planning to take a tougher stance on illegal immigrants. We had heard this very evident in Her Majesty's the Queen's speech earlier this year. The new immigration bill is more catered to issues like access to public services, financial aid, and, you know, really wants to crack down on employers as well, hiring those who are not allowed to work in the UK. The other major aspect of it is related to cases that of having to extradite an individual. Now, this is all to do with the new immigration bill that makes it clear that, quote, foreign nationals who commit serious crimes shall, except in extraordinary circumstances, be deported. So a lot of people are saying that the immigration bill that we're going to see is very different from this securities bond that's going to be presented, and they're not connected.
Indeed. At present, of course, foreign students already pay higher school fees compared to UK nationals. They also have to provide proof that they can support themselves while in the United Kingdom. Won't this policy essentially cut the competitiveness of the United Kingdom as a market for higher education?
Well, you know, at this point, actually, Rama, the security bond doesn't include students from what we're being told, but already new surveys are showing that more than half of overseas students in the UK feel less welcome with new migration laws, which again are not necessarily connected directly to this securities bond. In fact, research group Universities UK is warning that hardening international student visa rules could cause long-term damage to Britain's universities and cost over £2 billion in the next decade. That's why many universities are now trying to campaign to have students counted separately from headline migration, but also introduce new incentives so that students feel valuable and protected. The fear is that if we see more visa restrictions, overseas students will choose to study in the US and Canada rather than the UK, taking about £350 million a year in lost revenue with them.
Indeed, the thorny question of immigration and the lost capital in Labour it might bring. Thank you very much for that. That's CCTV's Miriam Bemad live in London. We'll be keeping tabs on that developing story and report on the developments right here on Africa Live. Now let's come back to East Africa. The Vice Presidents of Sudan and South Sudan have pledged to resolve the conflict over Juba's alleged support for rebels, which has repeatedly threatened cross-border oil flows. South Sudan's Riek Machar and Sudan's Ali Osman Taha say their governments want to implement a raft of deals allowing southern oil exports to pass through Sudan and to secure their disputed border. The two say they're happy the outcome of talks that took 2 days, adding they will resolve any outstanding problems which may arise without a mediator. Last month, bilateral ties hit a new low when Sudan said it would cut South Sudanese oil exports unless Juba ended support for rebels operating across their common border. Those are claims, however, which South Sudan denies. Over in Kenya, the country's Ministry of Energy and Petroleum is working on framing a new policy that will eventually see revenues from oil and gas exploration and mining trickle down to all levels of the economy. Speaking during the unveiling of Hashi Energy and Eni's new partnership, the cabinet minister in charge of that, Davis Chirchir, mentioned that East Africa's biggest economy is still on track to start oil production. Hashi Energy, through this agreement with Eni, an Italian multinational oil and gas firm, will distribute the entire range of Eni lubricants in the Kenyan market. And that, of course, covers everything from automotive to industrial, marine, greases and specialty products, all of which supply or satisfy rather lubrication requirements at an industrial level and a qualitative level as well.
Of significant importance is the development of the sectoral framework that will support the legislative framework. So we are working with leaders to develop this policy document to ensure that our leaders, and more importantly, the residents of the various places where we are doing explorations, not just in petroleum products, but be it in geothermal or coal, do understand how we leverage on those assets to ensure that we do bring up the economy quickly, both at the community level, the county and the national level.
We're also looking at the same for every region we go. We look at how we can untie the energy issue and improve manufacturing sector, and look at it the way Asia has grown, and we would look at Africa as the next forefront, and we hope we will make this this target of 2030 all over East Africa. We meet that demand of globally.
Let's make a quick run through the markets. Some pretty surprising numbers coming through so far today in two key markets. The first of which is Nigeria. It's been on a bit of a losing streak over the last couple of trading sessions. It ended the day higher today by 0.6. The JSE All Share Index down on the day, marginally so, however, only down 0.08%. The 20-share index in Nairobi still heading south, down by just under 0.4. And this was the kicker of the day. The Egyptian market, the EGX 30, up by just over 5%. This, of course, coming from the comments that we've seen from the Egyptian military. How this plays out for the rest of the week really should be intriguing to keep a close eye on.